Welcome to Stock Spotlight. I'm Michael, your guide to the stock market. In each episode, we analyze companies that have earned a watch or buy rating on my 33-question research checklist. Today, we're shining the spotlight on e.l.f. Beauty, ticker symbol e.l.f, and uncovering what makes it a standout investment opportunity. Join me as we explore the insights and strategies that empower savvy investors like you to make informed decisions. Let's dive in. My 33-question checklist evaluates companies across 9 categories, including fundamentals, management quality, industry position, fundamental and technical momentum, historical and future growth, valuation, capital allocation, and solvency and liquidity. By examining these diverse aspects, we aim to gain a holistic understanding of a company's strengths, weaknesses, and potential as an investment opportunity. As of October 2024, I have screened 191 stocks with 9 sectors covered and a mean quality score of 58% with a standard deviation of 15% and a top quartile benchmark of 70%. In terms of company size distribution, 83% of the companies that I've screened are what you would call large caps, which is a market cap of 10 billion or more, followed by mid caps, which is 2 to 10 billion at 16%. Lastly, small caps only make up about 1% of the stocks that I've screened, and I would like to do more small caps in the future, so please let me know if you have any suggestions there. From a sector distribution standpoint, the number one sector that I've screened is consumer discretionary at 20%, followed by information technology at 18%, then industrials at 16%, followed by healthcare at 13%, consumer staples at 9%, and a few others at 5 and 6%. From an overall stock evaluation standpoint, e.l.f. Beauty scored a 75% quality score among my checklist. This is in the 87th percentile, which gives it a status of pass. I also like to look at Schwab and Guru Focus for different perspectives. Schwab gives them a D rating. Guru Focus gives them a 69, which is the 6th percentile. e.l.f. Beauty was really intriguing to me because I scored them quite well in the 87th percentile and a pass, while Schwab and Guru Focus both were much more bearish. As a result of this misalignment, I wanted to do a deeper dive on e.l.f. I will now provide an overview of e.l.f. Beauty's business and industry, including its classification, market capitalization, core operations, business segments, geographical presence, and customer base. First, both sources that I use for industry and sector classification have e.l.f. Beauty as household products industry within the consumer staples sector. As of October 2nd, 2024, I've got them at a $5.9 billion market cap, which would classify as a mid-cap. e.l.f. Beauty, which stands for eyes, lips, face, has been making waves in the beauty industry since its founding in 2004. Their core mission is to make the best of beauty accessible to every eye, lip, and face. e.l.f. has positioned itself as a disruptor by finding expensive products that people love and creating affordable alternatives to the masses. This is all while maintaining a commitment to being cruelty-free, vegan, and clean. In my opinion, this is very customer-centric thinking. e.l.f.'s journey from a digital native brand to an omni-channel powerhouse is a testament to their adaptability. The company has undergone significant evolution, expanding from online-only sales to major retail partnerships with giants like Target, Walmart, and Ulta Beauty. In 2018, facing challenges from emerging digital brands, e.l.f. launched Project Unicorn, a strategic initiative to revamp its product lineup. This pivot has proved successful, leading to now 22 consecutive quarters of 20% or more sales growth as of Q1 25. e.l.f. has an impressive portfolio of over 1,900 products, with 5 brands generating more than $700 million in sales. Their cosmetics line features popular items like the Camo Liquid Blush and Instant Lift Brow Pencil. In skincare, e.l.f. emphasizes clean beauty with effective moisturizers and serums like the Holy Hydration Face Cream. e.l.f. operates their business as a single operating and reportable segment. With that said, they do separate out their brand portfolio into 5 areas. First, e.l.f. Cosmetics. These are affordable, high-quality vegan beauty products like lip liners, mascaras, and foundations. Cosmetics make up the vast majority of e.l.f.'s revenue, 80% plus. There's also e.l.f. Skin. These are clean, dermatologist-developed skincare for various skin concerns. There's also Naturium. They are a 2023 acquisition with slightly higher price points than e.l.f.'s core brands and a more skewing male audience. They also own Well People, which is plant-powered clean beauty with EWG verified products. Finally, Keys Soul Care. This is a holistic skincare brand owned by e.l.f. that was inspired by Alicia Keys. It focuses on well-being. Next, in terms of geographies, e.l.f. Beauty is experiencing remarkable international expansion, with non-US markets now representing 15% of net sales as of fiscal 24 and growing 91% year over year as of Q1 25. The company has grown so much that it has climbed to the number 4 position in dollar share for both the UK and Canada markets, with a retail presence in 14 countries and plans for further expansion, including a major launch in Germany and entry into Sephora Mexico, which would be their first partnership with Sephora. e.l.f. Beauty sees significant growth potential in these international markets, aiming to close the gap with competitors who derive up to 70% of their sales from outside their home country. In terms of the customer base, e.l.f.'s core audience is predominantly Gen Z. The 2023 acquisition of Naturium did broaden their appeal, as I mentioned, to bringing in more millennial consumers and a surprising 40% male customer base. e.l.f. does experience a distinct seasonal pattern in their business cycle, with sales peaking in the third and fourth quarters due to holiday shopping and year-end promotions. The first 2 quarters typically see lower sales as the company ramps up working capital for new product launches and marketing initiatives. This seasonality influences their inventory management and marketing strategies throughout the year. In terms of the industry, I've always believed that finding a good industry is as important as finding a good business. For the global beauty industry, it's doing quite well, with Statista and McKinsey projecting a 5 to 6 year CAGR over the next 5 years. However, e.l.f. Beauty is outpacing these numbers, particularly because of their presence in cosmetics and skincare, with analysts expecting an impressive 22% average revenue growth over the next 3 years. Despite this stellar performance, their market share still has room to grow. Based on their Q2 24 earnings call, their color cosmetics market share is just over 10%. Skincare is much smaller but will grow significantly with the Naturium acquisition. Key cosmetics competitors include major conglomerates like L'Oreal, which is the ticker symbol LRLCY. They own NYX Cosmetics. Estee Lauder, ticker symbol EL, and LVMH, they own Fenty Beauty, along with small players such as privately held ColourPop, which is owned by Seed Beauty, and Pixie Beauty, which emphasizes skincare alongside cosmetics. Other competitors are Coty, ticker symbol COTY, and Japan's Shiseido, ticker symbol SSDOY. In skincare, main rivals include Neutrogena, which is owned by Kenvue, ticker symbol KVUE, Milk Makeup, which is owned by Estee Lauder, and IT Cosmetics, which is owned by L'Oreal. I like to do a little bit of Porter's 5 forces analysis for the industry. In terms of competitive rivalry, I have this as high due to numerous competitors in a fragmented market. I then like to look at buyer power. I have this as moderate to high, as consumers have a wide range of alternative brands and can easily switch due to low switching costs. For supplier power, I did rate this as low to moderate, as e.l.f. Beauty produces most of its products in China, leveraging an asset-light business model that allows for lower prices and faster production. The threat of new entrants, this is moderate. As the beauty industry does have low barriers to entry, new entrants may struggle to achieve the scale and brand recognition of companies like e.l.f. Beauty. Threat of substitutes, I have this as low to moderate, as makeup and skincare products are difficult to substitute, though DIY solutions do pose some threat. In terms of how they compete, competitors mostly compete on price, quality, product innovation, digital marketing, and clean beauty standards. My overall assessment of the industry is that e.l.f. Beauty thrives in a highly competitive but growing beauty market by leveraging its asset-light model and Chinese manufacturing to offer affordable products while facing moderate challenges from new entrants and substitutes. Now that I've provided a business and industry overview, I will review e.l.f.'s business model, focusing on its revenue generation, marketing strategies, production methods, and pricing power. Additionally, I'll evaluate the company's high-quality attributes, both qualitative and quantitative. e.l.f. Beauty's revenue model is straightforward yet effective. They recognize revenue when control of products are transferred to customers, typically at shipment or delivery. I believe sales are primarily recurring, evident through their strong loyalty program, consumable product offerings, and digital engagement strategies, all of which encourage repeat purchases. Key sales drivers include beauty category performance, consumer spending levels, product awareness and demand, increased sales per linear foot, and space expansion with retailers. Notably, e.l.f. Beauty's revenue per employee of $2.4 million as of the latest trailing 12 months is significantly higher than my consumer staples top quartile of $1.3 million and far exceeds competitor L'Oreal's $476,000, indicating exceptional operating efficiency. e.l.f. Beauty's marketing strategy has been a key driver of its success, focusing on digital-first, disruptive campaigns that resonate with younger consumers. Over the past 4 years, they have significantly increased their marketing investment from 7% to 25% of net sales, resulting in a dramatic rise in brand awareness and satisfaction. In fact, unaided awareness in the US more than doubled from 13% in 2020 to 33% in 2024, according to their own investor decks, while brand satisfaction jumped 16 points to 80%. At the core of e.l.f.'s success is its innovative use of social media platforms, particularly TikTok, where the brand has become a 4-time TikTok billionaire. The company has also pioneered beauty brand presence on platforms like Twitch and Be Real, and recently expanded into the metaverse with a Roblox activation. Notable campaigns include the viral Eyes, Lips, Face challenge and unconventional partnership with brands like Chipotle, showcasing e.l.f.'s ability to create buzzworthy content that appeals to Gen Z consumers. e.l.f. primarily relies on third-party production for their manufacturing. Nearly all of their products are sourced and manufactured in China through close collaboration with a network of third-party manufacturers. This asset-light model allows for scalability and cost-effectiveness, but does come with risk. In terms of distribution, e.l.f. Beauty employs an omni-channel distribution strategy with 2 main channels. One, national and international retailers. This channel accounts for around 80 to 85% of net sales. Their largest customers are Target, which was 25% of net sales in 2024, Walmart at 17%, and Ulta Beauty at 16%. The company has strong relationships with these retailers, which helps enable both their domestic and international expansion. The second channel is their direct-to-consumer or D2C e-commerce. This channel represented 16% of net sales in fiscal year 24. It includes sales through their own websites and mobile applications. Notably, there has been a consistent growth trend in D2C e-commerce as a percentage of net sales, increasing from 10% in fiscal year 2022 to 12% in 2023 and reaching 16% in 2024. Looking at pricing power, I have that e.l.f. Beauty exhibits moderate pricing power. They are often viewed as providing a lot of knockoff products, but they do offer some high-quality cosmetic and skincare products at affordable prices. And with an average price point of $650 compared to $950 for many mass brands, they provide great value. Their moderate pricing power allows them to keep prices low on about a third of their products while implementing selective increases. I also believe their latest acquisition will help with their pricing power in the future. I also like to look at price elasticity. Their products likely have elastic demand, as cosmetics are discretionary purchases that customers can delay or forgo, that consumers can delay or forgo. Their positioning as an affordable alternative to prestige products does make customers price sensitive with low switching cost. Beauty products typically represent a small percentage of a customer's budget, which allows for adjustments based on price changes. For each company that I review on the podcast, I like to look at 2 qualitative, high-quality attributes. The first one for e.l.f. Beauty is innovation capacity. e.l.f. Beauty has demonstrated exceptional innovation capacity, with their rapid growth and market share gains illustrating their capacity to innovate and disrupt the beauty industry. Their success in digital marketing, particularly on TikTok and Roblox, has allowed them to connect with younger consumers in innovative ways. The second I'd like to discuss is capital intensity. e.l.f. Beauty operates with an asset-light business model, relying on third-party manufacturers and logistics providers. This approach allows them to maintain flexibility, scale quickly, and focus on core competencies like product development and marketing. Next, I like to look at several different quantitative high-quality attributes. The first section is returns and predictability. I like to see if the annualized price return CAGR is greater than the S&P 500 since the portfolio visualizer tracking began. For e.l.f. Beauty, the answer is yes. From October 16 to September 24, e.l.f. has beaten ticker symbol SWPPX, which is Schwab's S&P 500 index ETF, 18.47% to 14.97% with an average 0.51 correlation. Next, I like to see if there's any EBIT operating losses over the last 10 years. The answer is no, there are not, and the data period I looked at was 2015 to 2024. Third, I like to look at the guru-focused predictability. Is it at least 4 out of 5? For e.l.f. Beauty, it is actually a 0 out of 5. I'm wondering if this actually might be an error. This seems a little low. To round out this section, I like to look at the 10-year free cash flow linearity and see if it is at least 0.75. If you exclude the one negative year for e.l.f., which was 2016, the 9-year free cash flow linearity was 0.39, which does not meet my benchmark of 0.75. The next area that I like to look at is margins. First question, is the 10-year gross margin average at least 40%? For e.l.f., the 10-year average gross margin is 62%, which does exceed the 40% threshold. This is nice to see, and people may be surprised with how high of gross margins e.l.f. Beauty actually has. Second question, is the 10-year average SBC adjusted free cash flow margin at least 15%? Once again, if you exclude the 2016 negative year, the 9-year average SBC adjusted free cash flow margin is exactly 15%. Next, I like to look at some quality growth metrics. First, is the 10-year revenue CAGR at least 5%? In the case of e.l.f., this is definitely true as the 10-year revenue CAGR is 18%, far surpassing the benchmark. I then like to see if free cash flow per share has compounded at least double digits and more than revenue. So my benchmark is 10% here. If you exclude the outliers and negative values, which is 2015 and 2016, the normalized 8-year free cash flow per share CAGR is 35%, which far exceeds the 10% benchmark. Finally, is the 10-year average free cash flow conversion at least 100%? If you exclude the outliers and negative values again, which in this case is 2015, 2016, and 2019, the normalized 7-year free cash flow conversion is 165%, which is also significantly above my 100% benchmark. This indicates strong cash generation relative to reported earnings, but it's worth noting that there's significant variability from year to year, ranging from a low as 15% to a high of 367%. The last part of this section likes to look at if a company has high returns. So the first thing I look at is the 10-year average ROIC at least 20%, which meets the top quartile benchmark of my database, and also higher than its 2023 industry average. e.l.f.'s 10-year average ROIC of 5% on stockanalysis.com does fall short of my 20% top quartile benchmark and the 35% industry average for household products from Professor Damodarian's database. However, there has been strong upward trend since 2020, and on stock analysis, trailing 12-month ROIC has reached 12%, while QuickFS.net has e.l.f. at 18%. The next question that I like to ask is ROIC consistently greater than the WACC, and I like at least 2% more. While e.l.f. Beauty's ROIC is not consistently 2% or higher than its WACC across the last 5 years, it has achieved this benchmark in the last 2 fiscal years, exceeded its cost of capital or WACC by more than 7% in 2023 and 2024. After analyzing the business model and high-quality attributes, I will evaluate e.l.f. Beauty by examining its growth areas and risk factors. Each element will be assessed based on 2 dimensions: 1, the likelihood of occurrence, and 2, its potential impact on the business. This approach will provide a comprehensive view of the company's future prospects and potential challenges. Overall, I rate e.l.f. as having high growth potential. I'll list my top 3 growth areas, but that doesn't even cover including adding new retailers, expanding space at current retailers, and more. So the first one, international expansion. I rate this as high likelihood, high impact. International sales have surged 150% year over year as of the latest quarter, with strong growth in both the UK and Canada, and future plans for expansion into Mexico and other markets. Also, skincare category growth. I rate this as high likelihood, high impact. e.l.f. has already been outpacing the competition on skincare consumption by 32 times as of their Q1 25 deck. And with the Naturium acquisition, e.l.f. has room to significantly improve market share for their smaller category. Third, digital and e-com growth. I rate this as medium likelihood, medium impact. D2C e-commerce has been growing as a percentage of sales for the last 3 years, and e.l.f. is seeing large year-over-year increases in digital consumption. I think this trend will continue for at least the short term, and if they can get to at least 30% of sales over the next 5 years, I think that would be a great medium-term target, with potentially even up to 50% of sales in the long term. However, because this is challenging and they've only grown their digital penetration a few percent the last few years, I do rate this as medium likelihood. Let's now look at some risk factors. Overall, I do rate e.l.f. as high risk potential, and there's 3 that I'd like to discuss today. The first one is they are very dependent on Chinese manufacturing and national retailers. I have this as high likelihood, high impact. So most of e.l.f.'s products are sourced and manufactured in China and sold at Target, Walmart, or Ulta Beauty. Geopolitical tensions, trade disputes, and export tariffs could significantly impact production and costs for e.l.f., and their 3 national retailers account for almost 60% of sales, creating potential vulnerability to changes in their purchasing patterns or relationships. The second risk that I'd like to discuss is a potential TikTok ban or any social media platform instability. I rate this as medium likelihood but high impact. e.l.f. heavily relies on TikTok for marketing and customer engagement, and a ban or significant changes to the platform could disrupt their digital strategy. However, at the same time, I do realize that there's other platforms such as Instagram that they can leverage. Third, ROI on marketing spend. This I have as medium likelihood, medium to high impact. Marketing is a big expense for e.l.f. at around 25% of net sales. There could be potential pressures on profitability if marketing efficiency decreases over time. Overall, you can see that e.l.f. is a high growth, potentially high risk company. To accurately assess a business's health, it's crucial to monitor key operating metrics. Each industry has its unique set of metrics tailored to its specific needs. In the context of e.l.f. Beauty, we will explore 3 essential KPIs that are particularly relevant to their operations. The first KPI is cosmetics dollar share in the color cosmetics category. This metric tracks e.l.f.'s market penetration in their core category. The dramatic increase from 5.7% in Q1 22, which ranked number 5, to 12.3% in Q1 25, which ranks them now second, demonstrates the company's rapid market share gains. The second KPI is Beauty Squad members and growth. This is e.l.f. Beauty's loyalty program, and with over 5 million members and 30% year-over-year growth as of Q1 25, this KPI helps reflect e.l.f.'s customer loyalty. A strong and growing loyalty program can drive repeat purchases and provide valuable insights for targeted marketing and product development. So this is a KPI I think you should keep a close eye on. The third one that I'd keep an eye on is the percentage of sales from the top 3 retailers. This metric, which showed a slight decrease from 61% in 2022 to 58% in 2024, indicates e.l.f.'s dependency on major retailers and its progress in expanding distribution channels. The next section, Financial Statement Overview, will examine key aspects of e.l.f. Beauty's income statement, balance sheet, and cash flow statement. For the income statement, e.l.f. reports SG&A as their primary operating expense, with marketing and digital expenses detailed separately in the 10K. While SG&A has increased, it is growing at a slower rate than revenue. Notable financial events in fiscal 24 include a $2.9 million impairment of equity investment and a significant increase in interest expense, likely due to the Naturium acquisition. These factors suggest that e.l.f. is managing costs effectively while expanding, but has taken on more financial obligations to support growth. e.l.f.'s current interest coverage ratio is 14 on Guru Focus as of June 24, which is above my benchmark of 10 and the industry median of 8.7, indicating a strong ability to meet interest obligations. Next, the balance sheet. Their asset structure is weighted towards intangible assets and goodwill, which make up almost half of total assets. This reflects significant brand value and past acquisitions, while also maintaining substantial inventory to support its product-driven business model. Top liabilities are debt and leases, which are 50% of total liabilities if you include both short and long-term debt, and accrued expenses at 24%. Their liability structure is weighted towards debt, which will require diligent management of debt obligations and cash flows. As you know by now, I like to assess if goodwill is less than 30% of total assets. As of 2024, this is no, since they're actually right at 30%. And in 2023, they were at 29%, and in 2022, 35%. I then like to look at days inventory trend for a business like e.l.f. Their days inventory trend has shown significant fluctuations, peaking at 184 days in 2022 before improving to 128 days in Q1 24. The latest data from Q1 25 reveals a spike to 192 days, but this does align with the company's significant revenue jump, and I think that investors should keep an eye on future inventory trends to ensure that they continue to align with the company's impressive growth trajectory. I then like to look very quickly at the capital structure. Their debt-to-equity ratio has significantly decreased from 1.06 in 2015 to 0.43 in the latest trailing 12 months, which does indicate improved financial health. I then like to look at cash to debt. Ideally, I want my companies to be in a net cash position, and e.l.f.'s cash to debt ratio right now stands at 0.36, which indicates that the company has 36 cents in cash for every $1 of debt. Although there was a notable spike to 1.47 in 21, the ratio has stabilized lower in recent years. To me, this is not ideal, but it's also not surprising after the 2023 acquisition. I'd then like to look at their debt schedule. Their total debt surged to $300 million as of Q1 25, which was up significantly from $80 million in Q1 24, primarily due to a new revolving line of credit and an increased term loan. With $100 million due in the next fiscal year, the company is leveraging its balance sheet for growth, but this does increase risk. I'd then like to look at shareholders' equity. Despite consistent profitability in recent years, e.l.f.'s retained earnings remain negative due to significant historical losses or one-time events that created a large accumulated deficit, which the company is gradually reducing through its ongoing positive net income. Next, let's turn to the cash flow statement. The first thing I like to look at is stock-based compensation and whether it's consistently below 10% of revenue. For e.l.f., this is the case. The last 10-year range is from 0.26% to 6.3%, with an average of 4.7%, so they definitely pass here. I then like to look at the capital intensity of the business and seeing if CapEx is consistently below 5% of revenue over the last 10 years. For e.l.f., there was only 1 year, 2015, that slightly exceeded the 5% benchmark at 5.3%, and all other years were well below the threshold. Also on the cash flow statement is acquisitions, so I'd like to look at their M&A strategy and any recent notable acquisitions. Management doesn't outline their M&A process in the 10K, but based on their 2023 acquisition, they seem to make M&A decisions focused on expanding their product portfolio, reaching a new demographic, and enhancing their market position. I'd then like to see if past acquisitions have been successful. The 2023 one is still TBD, but there was a 2020 acquisition of W32 People for $27 million that does appear to be successful as it helped them overhaul their core makeup range with cleaner formulation. For one quantitative metric on acquisitions, you can look at the acquisition percentage of operating cash flow. And over the past 10 years for e.l.f., this has been 142%. This high percentage is primarily driven by two significant acquisitions in 2015 and 2024. So if you exclude these outliers, the average would actually be much lower. So this suggests that while e.l.f. Beauty doesn't make frequent acquisitions, when they do, they tend to be large relative to their operating cash flow. The last thing that I'll discuss is their dividends and buybacks. e.l.f. does not pay a dividend, but they did recently announce a $500 million buyback program following the completion of a previous $25 million program. The management section will evaluate the company's leadership structure, compensation practices, and capital allocation strategies. First, a leadership overview. e.l.f. is no longer founder-led as the founders stopped being involved in the company's day-to-day operations after CEO Tarang Amin took over in 2014. One of the founders, Joseph Sharma, still has about a 10% equity ownership, according to Guru Focus. Tarang Amin has been CEO since 2014, a tenure of about 10.7 years, which is well above the US average of 4.8 years. One thing that I'm going to be doing from now on that I got from a recent investing book is a management classification system, and it classifies managers based on most knowledgeable and passionate about the business to least knowledgeable and passionate about the business, with the first section being owner-operator, typically a founder, and they would be on the most knowledgeable and passionate side of the business, followed by a long-tenured manager, which is someone who's worked in the industry for at least 10 years, and then third, a hired hand who has limited experience serving this customer base. Tarang Amin would be classified as a long-tenured manager. While not the founder, he has been with e.l.f. for over 10 years and has extensive experience in the beauty and consumer goods industries. Next, I'd like to look at Glassdoor metrics. And e.l.f. Beauty scores very well overall. Their recommend to a friend rating is 77%, which is almost at the 81% top quartile benchmark. They also have an 83% approval rating of their CEO, and 78% have a positive business outlook. In terms of compensation, e.l.f. emphasizes a pay-for-performance compensation philosophy, with the CEO's compensation mix being 88% long-term incentives and 6% base salary. The CEO must hold company stock worth 6 times his base salary, with a 5-year compliance timeline, which I think aligns with shareholder interest. The compensation structure includes a base salary, annual cash incentive, and long-term incentives, with significant reliance on equity-based compensation that may lead to shareholder dilution. The CEO's base salary is $475,000, which is relatively low. Their main compensation KPI that I found for at least the annual cash incentive is adjusted EBITDA. As I mentioned in a previous episode, this is not my favorite metric, but a lot of companies do that. For long-term incentives, while specific metrics aren't detailed, they do offer a mix of time-based restricted stock units, which I really like, and performance share units, which are called PSUs. Next, for capital allocation, e.l.f.'s capital allocation strategy reflects their position in the growth stage of the business cycle. The company does not pay dividends, and their recent $500 million share repurchase program, which is nearly half of their annual revenue, has raised concerns about capital allocation efficiency and could divert resources from primary growth initiatives. This decision to me suggests an average capital allocation strategy, as it does introduce some misalignment with their stated priorities. I'd then like to look at a 5-year trend in diluted shares outstanding. Ideally, I'd like this less than 1%. For e.l.f. Beauty, this is not the case, as the 5-year trend in diluted shares outstanding is plus 14%. This trend might change, though, with this recently announced buyback program. The brief ownership structure section will assess the level of insider commitment and institutional confidence. Insider ownership is approximately 5% on market beat, which is below my 15% benchmark. This makes management compensation more important. For institutional ownership, it's at approximately 92% on market beat, definitely well above my 75% benchmark. The last section, valuation and technical analysis, will assess the company's intrinsic value using multiple valuation methods, while also examining its technical indicators such as long-term price trends, moving averages, and volume profiles. First, valuation. And before getting into this section, I wanted to note the potential limitations of using free cash flow-based models for valuing e.l.f. Beauty. Companies in rapid growth stages often prioritize reinvestment over free cash flow generation and have volatile free cash flow. I'll touch on a DCF and reverse DCF, but believe earnings growth projections and multiples might be better approaches. For DCF, I use investorsgrow.com. If you use a 9% IRR, a 2.5% perpetual growth rate, and 3 years of analyst free cash flow forecast, which is 17 total analysts, e.l.f.'s fair value is around $90, which is 19% overvalued versus current price of $106 as of 10/2/24. Using trailing 12-month free cash flow per share, a 9% IRR, and a 15 price to free cash flow terminal multiple, e.l.f. needs free cash flow per share to grow 27% per year for 10 years to justify current price. This is below their 3-year growth rate of 35%, but above their 5-year growth rate of 3%. If you use a conservative 15% growth rate for 10 years, the implied stock price for e.l.f. is $72. Next, I actually wanted to use a growth adjusted multiple approach that I found on Seeking Alpha, so credit to them. There was a June 24 article. This method projects future revenue and EBITDA based on management guidance and analyst estimates, and then applies a multiple to those projected earnings. The analysts on Seeking Alpha forecast revenue to grow between 18 to 21% for the next 3 years and reach $1.7 billion in 2027 with a 23% adjusted EBITDA margin. The analysts suggest e.l.f. should trade at 2 to 2.25x the average S&P 500 price to earnings multiple of 15 to 18, which then gets you a fair value of around $200. Next, I like to use Guru Focus for an EV to EBIT and EV to revenue. e.l.f.'s EV to EBIT is currently 44, which is less than their 63 10-year median, but greater than the 14 CPG industry median. This suggests that e.l.f. is trading to about a 31% discount versus its historical valuation, and a 200% plus premium to peers. Guru Focus industry median probably shouldn't be CPG for e.l.f., so this is just one thing I wanted to mention with that. Their 10-year median multiple implies a stock price then of $152. Next, EV to revenue. Their current EV to revenue is 5.6, which is slightly greater than their 4.5 10-year median and greater than the 1.2 CPG industry median. This suggests that e.l.f. is trading to a 24% premium versus historical and a 300% plus to peers. Their 10-year median multiple implies a stock price of around $85. The various valuation methods for e.l.f. Beauty yield a wide range of fair value estimates, from a conservative $72 using reverse DCF to an optimistic $200 using the growth adjusted multiple approach on Seeking Alpha, which does reflect the uncertainty for this company. Now that we've established some valuation ranges, I like to look at technical analysis. First, are they on a long-term 5+ year price uptrend? For e.l.f. Beauty, yes. And in fact, earlier in 2024, they hit 1,000% return over the last 5 years and reached an all-time high, although there has been a significant pullback on price over this summer. Next, I like to look at is short interest low, medium, or high? For e.l.f. Beauty, I'm getting a short interest range of 8 to 12%, which indicates a medium level of short interest, but not extremely bearish, which would be over 20%, or extremely bullish, which would be less than 5%. I then like to see how does their current price compare to their 1-year and 5-year 200-day exponential moving averages. The current price of $106 is in a mixed position. It's bearish in the shorter term with the 1-year EMA at $155, but bullish in the longer term as their 5-year EMA is at $95. Support seems to be at $95 with a technical ceiling of $155. I also like to look at their anchored volume profile, and they seem to have a lot of volume support between $106 and $110. Overall, e.l.f. Beauty has demonstrated remarkable growth with 22 consecutive quarters of 20% plus sales increases and a market share that has more than doubled since 2019. The company's success is driven by its innovative product development, digital-first approach, and ability to offer affordable beauty products. With strong performance in both cosmetics and skincare and significant international expansion, e.l.f. Beauty is positioned to be a major disruptor in the beauty industry in the years ahead. I am buying a starter position in e.l.f. Beauty at $106 and will DCA more if the price drops below $100. I'm investing now due to the company's impressive growth trajectory and strong potential for continued expansion at a reasonable starting valuation. And that wraps up today's episode of Stock Spotlight. I hope you found my analysis of e.l.f. Beauty both insightful and actionable. If you enjoyed today's episode, please subscribe, leave a rating, or drop a comment. Your feedback helps us grow. For real-time updates and insights, follow me on X at invest091. Join me next on November 6th when we'll dive into automatic data processing, ticker symbol ADP. Until then, keep your investments smart.